Good morning, guys. It's Monday, the 18th of June, 2018. This is the DAX Technical Analysis Morning Briefing. Welcome to the guys that are in the room, and hello to you lot that are watching this on the video back home. All right, so in front of us, we've got the charts, but I just want to quickly orient a few of the users as to where to find the information that we've referred to in the forum and on the members section. So as a premium or gold member, you will have access to this account section. To get that, you just simply go to thedaxtrader.co.uk and there's an account button. I think that should be one of the first links that you'll see. And it's running on my server at the moment, so that's a little bit slower than normal. But you'll see the link. Once you click on that, it said members login. Log in to your account, you'll get access to this. And you will be able to see the forum here with the strategy, and there's some other course material and libraries and things that you can use for your own analysis. You've got the Telegram channels here, which includes the chat room, the broadcast channel, and the signal channel. Just simply click those links and it will give you access to them. And you've got this swing trading course, which is we've made a really good start on. We've got some excellent material up there, which will help get an understanding of some of these tools. Specifically things like zooms and impulse waves, reaction waves, MPLs, ACR line sets, median line method, all of this great stuff will be very useful to help you with understanding how to use the swing trading. And then there's a bit of coding and programming course and some blockchain related stuff down there as well. So when you get a chance, ensure you log in, check that out, make sure you're not missing out on any of that material. All right. For everybody else, we're going to get started and take a look at the DAX. We've just got to explain that trading financial markets is risky and it involves the risk of losing your invested money. We're not providing a financial advice here. It's for educational purposes only. If you decide to enter a trade off the back of any of this information, do so entirely at your own risk. Please also ensure, if you're in the European Union, that you've read the ESMA article on the website as well. All right, so we have had an interesting week. We had pretty much the week was dominated by the central banks and witching last week. So there was FOMC, there was ECB, and there was BOJ, all the acronyms, but a pretty heavily intensive central bank week. As part of ECB, they have painted the sky blue as far as monetary policy is concerned. They have said that they are unlikely going to change the rates over the summer period, and they are going to continue easing until September and then reduce it to 15 billion from September until December. And so they've pretty much kept the monetary policy relatively easy. And for the next few months or so, we've kind of expecting for things to get back to a steady rhythm. So where are we at the moment then? Let's just take a look at things. It probably would be easier to highlight this using the POC, or the TPO, should I say. And each one of these individual profiles is a daily candle that's been split down. And each of these horizontal lines that are exposed that you can see here, the blue ones are the POCs, and I've just simply drawn the levels of them that's why the colors have changed. Anyway, if we have an exposed POC, they generally tend to be magnetic for price when price gets up to that level, with the exception of this one here from Thursday that actually didn't get a touch. It just missed that 13,179 level. Now, this is pricing from FXCM. It's CFD pricing, so it varies very slightly to the futures rates. But you've just got to be aware that we are moving, or we moved away from that old contract on Friday, or the contract's expired on Friday. So we would expect for this week to be more of a retracement. But overall, if we take a look at it now, it's probably going to find its feet and continue. So 850 is the most likely target if this continues a retracement. And if it goes any further than that, it will be interesting. I think 775 is the trend defining level. So I remain bullish as long as we stay above that. A retracement down to this zone would offer an opportunity to get into a long if it manages to hold it. But if you just look at how jagged this profile is, there's no real surprise that price is retracing all the way down to this point of control. I'm not surprised by that at all. So I'll just continue to watch it. In fact, if you look at all these gray areas, these are the value areas of previous days' profiles. And if you just kind of highlight them all, you'll look where that point of control actually is. And it's pretty much in that zone, with the exception of this day here, which I think is Wednesday. And that would be up about there. So somewhere in that grey shaded zone, I would expect for a retracement to turn. Now that's a 70-point range, which is probably larger than most people's stop losses, but somewhere in that zone, I'll be looking for a pivot component, something like that kind of idea where you see this kind of, it seems to be creating a base, and then it creates a wash of that base and then holds that base, and that's the pivot component, and that will be likely where price will continue to move higher from. All right, so that's what I'm looking out for. So we'll keep an eye on that as the week progresses. If we get into the 20-minute chart, it's a pretty clean chart at the moment, so we're going to need to just go and map that out. Let's just use a couple of swing markers here. Let's go with that one. And all I'm doing here is just mapping out the higher highs, the higher lows. I'm assuming that that was a higher high. I believe it was. Yeah, it was. Okay, so these are our current swings. And I suppose what you could do is take the most 3 recent alternating pivots, take a fork through that and see how it looks. We've broken down through the lower median line parallel. Would you then start to maybe change the slope of the fork? It's possible, just to see if frequency has changed, but that's where it'll be at the moment. I might just break the rule a little bit and just change the position of my C point just so I can get a wider fork, get more width on it. But either way you cook it, the lower median line parallel has been broken. It wasn't gapped, but it has been broken. And so may not provide as much information as I would want it to do now. If this is now our confirmed swing high, then you can probably draw a new fork from those 3 pivots, and it will look for a retracement. That's an interesting gap. Yeah, that's interesting. All right, so we've actually gapped below that median line. So let's get our 50s in there just to see if it holds on the quartile line. I like how price came down to, well, technically we've missed it a little bit, but let's just snap this to the grid. Yeah, it was a perfect tag. All right, so price came up, peeled away from the upper median line parallel, came straight down to the median line as it often does, and now it's gapped through that. So normally what you'd expect to happen in situations like this is a test of the underside down to the lower median line parallel. If it does get down to the lower median line parallel, would it have broken below the trend defining level? Well, for me, the trend defining level is down there, so no, it's still fine. 775 is the key level for me, with a kind of a first warning sign would be that one, which would be the 825 level. So I'll put that down as my minor. Somewhere in that zone will be fine. If it gets down to there, it's still going to hold that lower median line parallel. It's still going to be roughly around this minor swing here at 826. And that would be a good spot to look to buy. So it was in the zone that we talked about from over here. But now we've got a little bit more data around it. It's actually closer to there. And I would be pleased with that. So that's kind of where I'll be looking for now. And I don't really need to do much more analysis on the chart than that. We're just simply using the facts. The facts are the prices are creating a series of higher highs and higher lows. Therefore, it's a bullish trend. Look for the most recent swing low. And you would imagine if it continues, which is what we're speculating, if it continues, then you can then just simply get into a trade from there and look for a new high. 6.5 to 1 reward to risk. Thanks very much. All right, so onto the 4-minute chart. If we just take a look at this, we have got a very, very basic strategy forming here. And this is nothing new. It's a very, very simple idea. It's just based around, similar to a Darvis breakout, but it's an IB breakout strategy. And an IB is the initial balance or the opening range, more specifically the 2-hour opening range, which I like to use on the DAX simply because it takes into account the cash open. And how does it work? It's very, very simple. You just wait for the IB to form, and then you wait for a breakout. Take a trade in that direction. So in this particular case, we're on a 4-minute chart. It doesn't really matter what time frame you're on, but that was your breakout right there. So you would have actually gone long on that breakout. So you'd have probably gone long, maybe even as high as that. And your stop loss would be underneath the IB low. So that's quite a large stop loss. In this case, it's nearly 70 points. You'll notice that it dug into that zone down here, but it held above it. And what you're really looking to do is get at least 2 to 1, maybe 3 to 1 on your trade if you can. And that's quite a lot to ask for this particular strategy. In fact, that is a huge amount to ask. Would be somewhere up there. But it managed to get it in this particular case. So it was quite a nice example. What have we got on this one? So this was Thursday. That was when we had the ECB statement that came out about the interest rate changes and the continuation of the QE until December. And the interest rates are not going to change over the summer period. So, of course, market responded pretty well to that. On Friday, you'd have expected a little bit of a consolidation. You had a mini breakout here lower, so you would have expected this to head lower. And it obliged. And I don't know if you would have got 3 to 1 on this particular setup. Maybe you'd have had to adjust where your stop loss would have been. But let's say you would have got in there. You'd be looking for 3 to 1. It's somewhere down here. And you would have just tagged into that today. So the 2-hour IB is still in formation at the moment. Well, I tell a lie, actually, because it opened at 6. Or was it 7? I'm lying. Of course I'm lying. Still in formation. Got 20 minutes left on that now. We've got our IB low down here at 920 and our IB high somewhere up there at 1306. We would expect that if price was to take out the IB high, it's going to close a gap. And we would expect if it takes out the low, it's probably going to reach that 820 zone. So I can automatically say that it's probably not going to yield a 3 to 1 offer if it only goes down to 820. You're only getting nearer to 1.6 to 1. A more aggressive option would be to use these tops. And but again, I mean, you're barely getting 2 to 1. That for me is not a trading setup. The short opportunity was last week on Friday, not probably today, unless it goes further than that 820 zone that I'm looking at. So that's kind of my thinking at the moment. That's kind of the tools that I'm using to come up with those thoughts. So I'm looking for opportunities to continue for this trend to go long, and it may not work out. You know, if I get long here, it's pretty heavy, the market. It's going against us in the short term, but I'm getting 6.7 to 1 on my money. That means I only have to be right. Well, you can work out the percentage. I mean, that's like if it was 6 to 1, I only have to be right 14% of the time. And I'm pretty confident that the probability of this kind of setup is higher than 14%. So that, therefore, just using the statistics and the facts, I'm happy to take that idea. All right, so that is for the DAX. If we take a look at the FTSE, I'll just leave the chart that I've got on at the moment and just re-explain it one more time. So this is a zigzag, which normally typically represents 50% of a swing. And it was interesting because it formed in the middle of that zigzag an area where 3 or 4 times price responded to it. And now it attempted to take it out and gets rejected. And below, we've now broken this 76.38 level. So really, I mean, this market's not doing a lot. It's moving sideways in a large range. It's primed for mean reversion strategies like my BBRSI strategy that I've got in the forum, or another type of BBRSI strategy that you might well have developed yourself. But it's pretty good for that. So I'll be happy to buy or sell in this market and just trade that large range until it breaks. So that's kind of what I'm thinking on FTSE. Dow, however, is a little bit more wild, as it normally always is. And a lot of this analysis is kind of dying away now. I don't know how much of it I need to cut through and explain. 3 things I've left on this chart. Obviously, there was a short setup here that we discussed last week, but which hit target, but I'll just remove that and explain the 3 things that are on here. So we've got an ATR line set, action center reaction. You need a multi-pivot line through the middle with 3 points, 1, 2, 3. Then you need your action point, which I've put here. Technically, that's not perfect, but, you know, give me creative freedom on that one. And the idea is it follows Newton's third law of motion that suggests that for every action, there is an opposite and equal reaction. And the work from Roger Babson was to develop that into its application into the financial markets, and it can be used whilst trading. And as you see, a break through the center line gets an opposite and equal reaction down here. It then broke through the bottom of the reaction line and then tagged it on the underside. So you would actually be able to use that now or afterwards as a fork. If you just put that there, there, and there, for example, or I think the action line was there. Oh, the reaction line was there. So your center line, the A line is quite nice, gets a touch. The BC line is pretty ugly, actually. But I do like how it catches the underside of this lower median line parallel. I mean, it didn't really even get an opportunity to head up towards the median line. And as far as forks go, it's a bit of an odd looking one. So I'd be happy to just remove it. This was the fork using these 3 pivots. And since then, price is now broken below that low. And we are now in a bearish short-term trend, or the start of at least a bearish short-term trend. And that's an unusual looking fork once more. But we're looking to test that lower median line parallel of this most recent fork now. So you've got 2 options. If you were to take a long off of here, stop under there, take the lower median line parallel and head towards the median line. That's a 5-to-1 setup. You only have to be right 1 in 6 times, 16%. I'd be happy with those odds. But I don't really like the Dow at the moment because of the fact that the rate hike path has been pretty much confirmed. Expectations are there's going to be another 2 this year. That trend tends to weigh pretty heavily on equities when things like bonds, I'll leave my opinion out on bonds, but when things like bonds look more attractive because they're gaining a higher yield, money starts to flow out of equities and into bonds. I personally believe that bonds will be the downfall for the US economy and will ultimately be the reason that it completely goes to, yeah, you know where I'm going with that. All right, so the Dow at the moment is clearly bearish in the short term, and that is a line in the sand that does look interesting for me. Would I want to be taking a bounce on this particular market on a Monday? No, but that is a setup that would be something that's of interest to me, because from there it would look interesting to take a short. And that is a rough idea or a rough overview of the markets. BBRSI, I'm not going to go into that. I'll leave that to the premium chats. But hopefully that has explained a few of the ideas that were in the article from this morning. If you want to know more information, then please send us a message. The description below, if you're watching this video at home, will have all of the links that you need to get in touch. Send me a message on Telegram, send us a message on Twitter, come and add us, like the video if you like what we're doing here as well, share the content around if you think it can help other people, and get active and start sharing some of the ideas when you get the opportunity. All right, guys, we'll leave it there for now, but thanks for joining, and we will catch up with you again later on.